If you're on GIS and you want to take a part-time job or pick up some side income to fight back against inflation, I've got incredible news for you. Service Canada actually lets you earn up to $10,000 a year without wiping out your full guaranteed income supplement. Not $0, not $500, $10,000. And most seniors never hear this from anyone. Not their neighbor, not their bank, sometimes not even their accountant. Here's the part that shocks people the most. The first $5,000 you earn from a job or from self-employment is completely 100% exempt from the GIS calculation. Service Canada doesn't count it. It doesn't touch your monthly check. It's like it never happened as far as your GIS is concerned. I'm John A.J. On this channel, we bring you official CRA and Service Canada facts to help you keep more of your hard-earned money. No fluff, no guessing, just the real rules straight from the source. If you haven't hit that subscribe button yet, do it right now, because Service Canada changes these numbers every year, and I don't want you to miss a single update that could cost you real money. Today, I'm going to walk you through the exact $5,000 full exemption rule, how the next $10,000 gets a 50% exemption, and exactly how to report your employment income on line 10100 of your tax return so CRA applies that exemption automatically without you having to call anybody or fill out extra forms. Stick with me to the end, because I'm also going to show you the one thing you can check right now on my Service Canada account to confirm this exemption is actually being applied to your file. Now, I know what some of you are thinking. John, if I take a part-time job, won't Service Canada just claw back my GIS anyway? Isn't that how it always works? Fair question. And normally, yes, most extra income does reduce your GIS, but employment and self-employment income get special treatment. This is a deliberate policy. The government wants seniors staying active, staying connected, and topping up their own income instead of relying only on government checks. So they built in this exemption on purpose. Let's break down exactly how it works. Point 1. What is the GIS employment income exemption? A. What is it? The GIS employment and self-employment income exemption is a rule built directly into how Service Canada calculates your guaranteed income supplement. Normally, GIS is reduced by 50 cents for every extra dollar of income you report. That's the standard 50% clawback rate that applies to things like RRIF withdrawals or investment income. But when it comes to income from a job or from self-employment, Service Canada carves out a special exemption so you're not punished for working. Here's exactly how the tiers break down. The first $5,000 of employment or self-employment income you earn in a year is completely exempt. 0% counted. Then on the next $10,000, meaning income between $5,000 and $15,000, only 50% of it counts toward your GIS calculation. The other 50% is exempt too. B. What is it worth? Let's put real numbers on this because that's what actually matters to your wallet. Say you earn $15,000 in a year from a part-time job. Under normal GIS rules, all $15,000 would be counted and you'd lose about $7,500 a year in GIS. That's half of it. Gone. But with this exemption in place, here's what Service Canada actually sees. The first $5,000, 0 counted. The next $10,000, only half counted, which is $5,000. So instead of Service Canada counting the full $15,000 against you, they only count $5,000. That's a $10,000 difference in what's used to calculate your GIS reduction. At the standard 50% clawback rate, that difference alone protects roughly $5,000 a year in GIS payments that would otherwise disappear. Now, some of you watching are thinking, this sounds too good to be true. Is this really CRA approved? Won't I get a letter telling me I owe money back? I hear this concern a lot, and I want to be straight with you. This exemption isn't a loophole, and it isn't something risky you're sneaking past the system. It's written directly into the Old Age Security Act regulations that govern how GIS is calculated. Service Canada applies it automatically when you file your taxes correctly, which I'll show you exactly how to do in a few minutes. C. How do they get it? You don't need to apply for this exemption separately or fill out a special form. It's built into the GIS calculation Service Canada runs every year using the income information from your tax return. The only thing you need to do is make sure your employment or self-employment income is reported on the correct lines of your tax return, which we'll cover in detail later in this video, and file your taxes on time every single year. Service Canada pulls your income data directly from the Canada Revenue Agency after you file, and the exemption is applied behind the scenes. Point 2. What qualifies versus what doesn't? A. What is it? This is where a lot of seniors get tripped up, so I want to be crystal clear. Not all income qualifies for this exemption. Service Canada only applies the $5,000 and $10,000 exemption to income that comes from actual work, meaning employment income or self-employment income. Other types of income, even if they feel similar, do not get this special treatment. B, what is it worth? Let's go through exactly what counts, because getting this wrong can mean the difference between keeping thousands of dollars in GIS or losing it. What qualifies for the exemption? Part-time job wages, the kind that show up on a T4 slip from an employer, consulting work you do on a contract basis, freelancing, writing, bookkeeping, tutoring, whatever your skill happens to be, small trade or craft income like selling handmade goods, doing minor repairs, or seasonal landscaping work, and seasonal or gig work in general, as long as it's genuinely employment or self-employment activity. What does not qualify for the exemption? Investment income, like interest or dividends from a non-registered account. RRIF or RRSP withdrawals. These are treated as regular income and reduce your GIS starting from the very first dollar. Pension income, including CPP and any workplace pension you receive, and capital gains, for example, from selling stocks or property. These other income types are counted against your GIS at the full 50% clawback rate with no exemption cushion at all. So if you're deciding between drawing down your RRIF a little more this year or picking up a few part-time work shifts from a pure GIS protection standpoint, the part-time work is going to treat you far better. I know some of you are asking, oh, John, what if I'm self-employed and my income is irregular, some months good, some months nothing? Does that still count? Yes, it does. Service Canada looks at your total net self-employment income for the year as reported on your tax return, not month by month. So seasonal work, irregular contract gigs, and side hustles all still qualify, as long as the total net income is properly reported as self-employment income. C. How do they get it? Keep good records throughout the year, receipts, invoices, mileage logs if you're self-employed, so that when it comes time to file, your accountant or your tax software correctly categorizes this income as employment or self-employment income rather than lumping it in with other income sources. This categorization is what tells CRA and eventually Service Canada that this particular income deserves the exemption. Point 3. A real dollar scenario. What is it? Let's walk through a real-world example so this isn't just abstract numbers floating around. I want you to picture Helen. Helen is 68 years old, lives on her own in a small town in Ontario, and receives GIS along with her OAS. She's worried about the cost of groceries, so she takes a part-time job at a local craft shop, working about 12 hours a week. B, what is it worth? By the end of the year, Helen has earned $4,500 from that part-time job. Because that entire amount falls under the first $5,000 exemption threshold, Service Canada counts $0 of it against her GIS calculation, 0. That means Helen keeps every single dollar of that $4,500 in her pocket, and she continues receiving her full monthly GIS check completely untouched. She didn't lose a cent of government support by choosing to work. In fact, she came out $4,500 ahead compared to not working at all, on top of everything she was already receiving. Now let's push this a little further. Suppose Helen picks up more hours the following year and earns $12,000 instead. Here's what happens. The first $5,000, still 0% counted. The next $7,000, since it falls within that $5,000 to $15,000 partial exemption band, gets counted at only 50%, meaning $3,500 is added to her GIS income calculation. Compare that to the alternative. If this exemption didn't exist at all, the full $12,000 would be counted, and Helen would see a much steeper reduction in her monthly check. The exemption saves her thousands of dollars a year in protected GIS income. Some of you are probably thinking about your own situation right now, wondering, what if I already started a part-time job and I didn't know about this exemption? Did I lose money last year? Here's the reassuring part. This exemption is applied automatically by Service Canada when your tax return is processed using the income figures you report. So as long as you reported your income on the correct line, which I'm about to show you, the exemption should have already been applied behind the scenes whether you knew about the rule or not, but it's still worth double-checking, and I'll show you exactly how in a moment. C, how do they get it? The key takeaway from Helen's story is this. The exemption isn't something you request. It's calculated automatically based on the income you report on your tax return, which brings us to the most important practical part of this video, how to actually report this income correctly. Point 4, step-by-step reporting guide. A. What is it? This is the part where a lot of well-meaning seniors accidentally cost themselves money, not because they did anything wrong on purpose, but because they weren't sure which line to use or their tax software auto-filled something incorrectly. Getting this right ensures Service Canada applies the exemption automatically and correctly. B. What is it worth? Reporting your income correctly is worth potentially thousands of dollars a year, because if your employment income accidentally gets miscategorized as some other type of income, Service Canada may not apply the exemption at all, and your GIS could be reduced far more than it should be. C. How do they get it? Here's exactly what to do, step by step. Step 1. If you worked a part-time job for an employer, your employer will send you a T4 slip. The employment income shown in box 14 of that T4 gets reported on line 10,100 of your tax return labeled Employment Income. This is the line CRA and Service Canada use to identify income eligible for the exemption. Step 2. If you're self-employed, consulting, freelancing, selling crafts, doing small trade work, your net self-employment income is reported on line 13,500 of your tax return, which covers self-employment income. Make sure any related expenses are properly deducted first, since it's your net income, not your gross income, that gets used in the GIS calculation. Step 3. File your tax return by the deadline every single year, even if your income is low. Service Canada renews your GIS annually based on the previous year's tax return. If you file late or don't file at all, your GIS payments can actually be interrupted or stopped completely until your return is processed. This is one of the most common and most avoidable reasons seniors lose GIS payments they were otherwise entitled to. Step 4. Once your return is filed and assessed, log into My Service Canada account, often called MSCA, using your GC key or a sign-in partner. Inside your account, you can view your GIS payment details and your notice of assessment information side by side. If your part-time work income was properly categorized, you should see your GIS amount reflecting the exemption, meaning it's higher than it would be if the full income amount had been counted dollar for dollar. Step 5. If something looks off, if your GIS dropped by more than you expected after reporting part-time work, don't just assume it's correct. Call Service Canada directly or speak with a tax professional who's familiar with GIS calculations and ask them to confirm the employment income exemption was applied to your file. It's always worth double-checking rather than losing money quietly. I know a few of you are wondering, John, why didn't my accountant ever mention this to me? Honestly, a lot of general tax preparers focus on minimizing your tax bill, not necessarily on optimizing your GIS. GIS rules live under Service Canada and the Old Age Security Act, not strictly under the Income Tax Act. So this exemption sometimes falls through the cracks, unless your preparer specifically works with seniors on fixed incomes. That's exactly why I make these videos, to put this information directly in your hands. Here's what I really want you to take away from today. The Canadian government isn't trying to punish you for working in retirement. This exemption exists because policymakers genuinely want seniors staying active, staying engaged with their communities, and building a little extra financial cushion against rising costs, without being forced to choose between working and keeping the support you've paid into your whole life through your taxes. $5,000 fully protected. The next $10,000 half protected. That's real money staying in your pocket, on top of your GIS check, not instead of it. If this video helped clear things up for you, do me a favor and share it with another Canadian senior who might be sitting on the fence about picking up part-time work because they're worried about losing their GIS. This information could genuinely put thousands of dollars back into someone's life this year. Drop a comment below and let me know what province you're in. I read every single one, and it helps me know what updates matter most to the seniors watching this channel. And if you haven't already, subscribe and turn on notifications because Service Canada and CRA update these thresholds regularly. And I'll be right here breaking down exactly what changes and what it means for your check. Take care of yourselves, keep more of what you earn, and I'll see you in the next video.